What's up, mobile traders? Hope you all having an awesome day. A quick one here on net gas, gold, silver, crude oil, starting with natural gas. So what do we have right here? And fake out has happened right here as mentioned in my yesterday's video. And let me show the clip from my last video so that we can connect the dots from there. We are coming down and getting closer to the trend line right here from where we have multiple rejections from this trend line. That is why I'm still looking at this trend line. And if we have a bullish engulfer, something like this at the trend line or a double bottom formation at this trend line. Now, be very careful with the fake outs like this in the past, where the price has gone down and left the wick and then come back up with a body. So we can still see some spike down and then push back up with a wick. In that case, that will be a possible fake out. Beware of that. Once we have a push down and if you have two candles closed below, only then we are bearish short term till this zone right here. Perfect. So as you can see, the candle has gone down. Right here, the very next candle is coming back up and forming a bullish engulfing pattern. If that turns out to be bullish engulfing pattern, in that case, that will be a general buy signal. Again, that is not one of my strategy, the way I teach my students, but using some discretion, the way some technical traders trade, they use trend lines for an entries. For example, we have a bullish engulfer right here and that nicely pushed up. We had a fake out happened before, bullish engulfer right here and then price nicely pushed up. Similar thing has happened right here. So let's see how it goes. If you want to take your trades, that's totally up to you. That's totally on your own risk. But I personally don't like to trade trend lines. But again, that's a general signal that price is going to likely to push up. What to expect from here? As we are below 50 EMA, we are still not completely bullish. Talking about my strategies for the pullback entries, once we are broken above 50 EMA, only then I'm going to start to look for the retest, possible retest of the zone below right here, which I've already mentioned in my yesterday's video, or just a pullback above 50 EMA with a bullish engulfer and keep on taking long. So that is all I'll be looking at. Just buy trades once we are broken above, but it itself an entry if you use a discretionary approach in trading. And if you look back here on capital.com. Now, I want to teach you something here. Yesterday, I've said that once we have a breakout and if we have two red candles below, then we're going to start to look for the bearish pullback entries. Now that is still in the play. We can still look at the bearish pullback entry. If we have a bearish engulfer below 50 EMA, I'm going to go short term only, a quick scalp. Now, I'm going to show you one example which I forgot to mention yesterday. Now, if you're my student, that is a valid bearish pullback entry. It is something I teach my students in the course with exact 6 rules that has been met right here, and that would have hit your take profit easily. Looking at the 180R is 9, and if you enter right above, a little bit above the candle, and if you see the price push down how much? 111 points. 90 was the ATR, and that would have hit your take profit. So exactly something I'll be looking at if we have a condition below 50 EMA. Now if you look here on daily time frame, that was a fake out, right? That was not closed yet completely. So that is why very important to look for the fake out. Some traders start selling here without seeing a momentum. Once we have a good momentum below, only then I'll start to look for the retest and a short-term bearish trades. So that is all I'll be looking at. We are still not completely bullish, but bullish trend is intact. Looking at a nice trend channel that is still intact. We are not completely closed below. If that happens, I'll be looking at this level for the next buy opportunities, which is right here, these numbers in blue, which is 2.980, that goes up to 3.1195. So keep an eye. If the price breaks and closes above, then it is a signal that prices now start to push up and carry on with the trend. And then we're going to start to look for the pullback entry bullish. For now, look for bearish short-term trade if we have a strong bearish engulfer where the 6 rules are met, which is not likely at this point because we do not have a very good momentum to take sell trades. But keep an eye, that is something I'll be looking at as well. On NEMEX, that didn't even go below the trend line. So we are still intact within this anchor support, means we are still bullish. A kind of double bottom here and also on my own platform where I trade nat gas on Owanda, nice double bottom right here, and we are pushing up. Once we are broken above 50 EMA, in that case, start to look for the move towards the upside. So at this point, just buy trades. Once we are broken above and we are still intact with an uptrend, looking at this nice trending channel. Nice trend line, rejecting nicely from this trend line as well, rejecting from 20 EMA that was mentioned clearly yesterday, not closed below 20 EMA as well. So for now, not bearish, and I'm still positive for natural gas that the price of natural gas will push up. Again, for my entries, I've already mentioned my pullback entry above 50 EMA. For my students, look for the valid entries. In general, my bias is still bullish. Next up, we have gold. Nicely pushed up, hitting the targets, and now we can adjust the Fibonacci tool here on gold as well from this high to the upper level of the support. Now, at this point, let me mark this as a green. I like my support as a green color. So all I want to see a pullback to 50% 1% retracement, then expecting another spike out of gold to 1.618 retracement, and that is also aligning with the next level of resistance, which is the only resistance here on gold. So aggressive entry, very risky entry, but with a better reward to risk ratio, something I would place my position tool here. Stop loss can be below, take profit can be something to 1.618 retracement. That comes up as 1.3 to 1 reward to risk ratio. That is what I'll be looking at here on gold. Otherwise, if you are not an aggressive trader, just look for the pullback above 50 EMA followed by bullish engulfing pattern, and just go 180 for your targets and then manage your trades to 280 or to 1.618 retracement. The ATR is currently $11. That is something for your stop loss and take profit both. So keep an eye, either a pullback entry bullish or aggressive entry from 50% retracement, or pull back to the zone that has been recently broken, which is a very good entry. 2712.13 goes up to 2723.28, from where I want to see bullish engulfers or double bottom entry confirmation. So keep an eye on these entries. Just buy trades till this zone from where we can see a possible push down. Coming here on silver, what a nice move out of silver, and exactly how we predicted yesterday that we can see a hit of the targets, then a possible push down. So let me show you the clip from my last video so that we can understand conditions and entries. Silver is very slow but nicely pushing up towards our target, which I've mentioned in my last video, looking at this nice bullish engulfing pattern, which is our pullback entry as well. We are already up here on silver. Let's see how it goes, but I'm expecting a price to hit my targets, recent highs, then expect a pullback, another bullish engulfer, which I'm expecting for the price to get to, as silver is very slow and behind gold. So that is why I'm expecting silver to push the gold higher as well. Awesome. So price is pushed up, forming a double top pattern right here at the minor resistance, which is right here, forming a double top pattern. Looking at that, we have a morning, we have an evening star pattern, we have a swing high bearish engulfer, we had a double top, shows a good bearish pressure, a divergence in the RSI. So I'm expecting some more pullback, could be to 50 EMA, and if rejected at 50 EMA, followed by bullish engulfer, only then I'm gonna go long. If there is no engulfer, no bullish condition, then we can likely to push down and keep on pushing down from here. But 50 EMA is a very strong support in an uptrend. So look for valid bullish engulfer above 50 EMA. Wherever you get engulfer above 50 EMA, let's say next candle turns out to be a bullish engulfer, that is also one of my entry condition using 1 ATR for my targets. So keep an eye, only buy trades for silver until the price hit this level, which is right here, the numbers in blue. But I'm expecting a good retracement, looking at this nice double top to 50 EMA or even below that. One candle is allowed to go below, but if the very next candle goes back above 50 EMA, close at the bullish engulfer. In that case, I'm going to go long. Lastly, we have crude oil. Now here on crude oil, if you're wondering, that is not one of my valid entry condition, even though if it's pushes down, that is totally fine. I won't be taking it as an entry because it invalidates one of my pullback entry rule. If you are my student, you know why it is that. Now looking at the bearish cross, we have a bearish pressure, means we can likely to push down from here as well. Since we are below 50 EMA as well, that is why we have a likely chance the price is going to push down from here, and price is nicely trending, pushing lower. If you look here, kind of rejection right here, and kind of flag pattern is price is forming right here as well. So it is something we are looking at as well. If the price closed below with a solid solid red candle, in that case we can see a possible push down to the level below right here. If the price, let's say, close above with a solid green candle, only then I'm expecting a price to shoot up from here. That will be an entry. Stop loss can be below, a very aggressive entry if you don't want to wait for the retest. If you want to wait for the retest, pull back, and then a bullish engulfing candle is something I'll be looking at, and the next level of resistance, which is right up there from where I want to enter my sell trade. If you're someone looking at on Owanda, exactly something like this, where I personally take my trades, flag pattern formation, break above or break below, something I'll be looking at the zone above, which is right here, from where the price nicely pushed down here on Owanda 79.78 goes to 80.99, from where we can look for the sell trades, and the zone below is 72.24 goes to 73.35, from where we can look for the buy trades only. So keep an eye, break above or break below will confirm the direction of crude oil. So keep an eye here for your entries. So that is it for today's video. Hope you got a value. If yes, give this video a thumbs up, subscribe if you're new, so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next video. Till then, take care.